Today, I'm joined by a familiar face in the real estate industry, Sean Zubor, founder, CEO of Stonehaus Realty, leader of your own team, Zubor and Associates, and a brokerage with a 300 plus agent, reported annual sales over 3.5 billion. Now, Sean is an amazing human. Just like down to earth. We just did some amazing podcasts on a different platform. Built a real estate organization that's very unique in Western Canada, expanding on hopefully ambition in United States. So today why I have Sean here is to strictly talk about what's happening in the market, what should buyers and sellers need to understand, and then specifically where is Tri-Cities market heading. Mm-hmm. Thanks you for your time, Sean.
Thanks
out of your busy schedule, and I've been selfish to ask a lot of your time here.
No, appreciate it, man. Thank you, and thank you for having me.
So let's dive in, Sean. In one honest sentence, how would you describe the real estate market right now?
Challenging. Yeah, I mean, the stats are the stats, and it is true. We're 25-year low for sales, if I remember correctly. The Greater Vancouver Real Estate Board went from, I think, at a high of 21,000 agents to under 14,000 agents.
14,000.
Yeah, the last one I read on.
I hope I'm not the stats next year.
Exactly. You and I both. So, I mean, and I believe the Fraser Valley Board lost about 1,500 or something like that. They always had about 6,000, 5,000. So, I mean, that's 5,000 or 6,000 agents gone. So numbers don't lie. It's tough out there, without a doubt. Now, the reality is there's always opportunity in every single market. I think there's major opportunity for agents, major opportunity for buyers, sellers in certain points. And yeah, we can kind of dig down into each one of them. But overall, the market is I'd be a lie if I wouldn't say it's definitely challenging.
Sure. Some may know, but let's just kind of recap it. What caused it?
Multiple things. So we have... Well, okay, the biggest thing, and it's always the biggest thing, is, right, the same reason that caused upward markets in real estate, both in stocks and the same as down. So a lot of it is the mentality of everybody that's here right now. Mm-hmm. So, you know, we have, when COVID was happening, there was a lot of political interest rates changes, so on and so forth, that made that amazing, crazy upswing of a turn, which was probably way too much, way too quick. So we're seeing the tail end of that coming back down, but it's the same thing. It's you have consumer mentality of it's a bad market. Everybody's telling each other not to buy or not to do anything. And so that applies to everything, right? So it's that herd mentality is part of it. Now, obviously, there's definitely a bunch of things in place that have helped spark that. So overall cost of living, we are one of the most unaffordable places to live out of the G7. So with inflation and everything else from groceries to fuel to all these different types of things, like something has to give. Interest rates obviously are substantially higher than they were in COVID that we were talking about on the previous podcast. I was lucky enough to lock in a 7-year at 2%.
Still have that?
I still have that. Yeah, because that was 2022. So
the picture of that, put it on your frame.
Yeah, exactly. Finally, I won because before it was all variable and I lost horribly. But point being is a lot of it has to do with, this is just my personal opinion anyways, a lot of government mismanagement, a lot of red tape. It's Vancouver in general for developers is a very difficult place to do business. Yeah. I own another company called Reds Boulevard. We had 800 units coming to market this year and next year. We're down to about 167. And either some of them have decided not to sell whatsoever. They're not going to do anything. Some have gone into receivership. Some have turned into purpose-built rental only. So it's extremely difficult. And, you can't just blame the government. There's international and global things, that tariffs and so on and so forth that have had some play in it as well. But generally speaking, I would say it's the overinflation of the pricing from COVID, which was government backed and fed with different policies when it came from COVID to interest rates to all these different types of things that, during COVID, really, you had nothing to do. You can go out, you can go to restaurants, you can go fly, you can do anything. You worked from home, so you can spend your money on anything but what you could, which would be your house and your outdoor recreation activities. It's the same thing that happened with trailers.
Right.
Trailers
Right.
went from $15,000 to
Yes.
$75,000 overnight.
That's right.
Right? Quads, ATVs were sold, all these different types of things, and now they're experiencing the exact same thing. Right? It's
Yeah.
over amount, over surplus. Now people are going back to work. Things have changed. So the highs of 2021 and 2022 are one of the things that have hurt us. And then when you look at the overall cost of doing business in BC, that's hurt it a lot as well. So, I'm not going to go on record saying names, but you can use Google and AI to search it. 3 out of our top 6 developers in BC are like neck and neck with foreclosure. So
Right. Of course.
you're seeing buildings going to receivership, all these things. These are billion-dollar companies
Mhm.
that may not exist in a few years, right? So, yeah, unfortunately, a lot of it has been government policy. And then a lot of it is just, sentiment of what's happening out there in the market.
Can you elaborate, like, what is the government policies that
Yeah.
obviously they may look at it and say, oops, we made a mistake, or are they saying, no, it's the right thing?
So the problem with government in general, okay, and I'm not going to be like liberal, conservative, whatever. I'm just going to say in general because it happens way too often. It doesn't matter what party. They have no business acumen, or if they do, it's not very good, right?
Yeah.
It's based on votes and what is sexy to say at the time versus long-term thinking and planning, right? So they're quick to make actions that have not been thought through and have not been actually dealt with or spoke to with the actual professionals. Like, for example, a few months ago, we all got an email from BCFSA or whatever it is asking about multiple offer situations on how they should be changing wording. We haven't been in multiple offer situations for the last 2.5, 3 years.
Right.
You know what I mean? Why is our government focusing on protecting people in multiple offer situations that doesn't even happen right now? How about affecting people and like making sure that then when they brought a pre-sale 4 years ago that they can actually get into the home? How about restructuring some kind of like financing policies? How about doing something that is actually applicable to what we're talking about, the issues that we're having today, not issues we're dealing with literally 6 or 7 years ago, right? So, they're just not in the reality of where the business is. So, for example, and I use this all the time. So I was a big proponent of the foreign buyers, closing foreign buyers, but years and years ago, right? And funny enough, I'm not a massive fan of like the government in Australia by any means in various different ways, but they had some very, very thought out, well-planned things. So if you look at, Sydney and I think Brisbane and a couple other different places, foreign buyers were banned from buying resale, but allowed to buy brand new, right? Which now the government is looking at one of the options because in 2027, the foreign buyers ban ends, right? So either they can extend it, they can amend it, or they can get rid of it, right? So what they should have done is not banned it. What they should have done is just said, what is benefiting BC? And one of the biggest sectors of British Columbia, next to forestry and minerals and so on and so forth, is real estate. It is construction, right? So why don't we get foreign buyers to come in and buy new construction? Will that have some modest increase in overall pricing? For sure, right? But it's going to create a stable balance of people coming to Canada, wanting to invest in Canada with a stable real estate market. And you're not going to have foreign buyers in multiple offers on all the other resale products, right? So that's one thing. The other thing too is what most people don't realize, and you can Google it, and I'm going to bite my tongue with the exact statistic, but I'm going to say it's roughly about, an article came out, that the average condo in Vancouver, and this was a few years ago, the average condo in Vancouver, if it was sold for $1.3 million, right? Taxes alone in that $1.3 million was just shy of $400,000.
$400,000. Wow, that's
so
like 35%.
35%. And when you count, and this is not a straight 35% tax, but it's along the way. Like, so for example, a lot of people don't realize on certain corridors, when you did a land assembly and that home that was originally worth, like, let's say in that area, that about a tear down home of 1.8 million, let's just say, that as a regular residential home, and that is now sold for 4 million because it's a high rise site or a low rise site or whatever it is. The government or the municipality actually taxes 35 to 55% of the uptick to the developer.
Wow.
So from that 1.8 to that $4 million, half of that money on top of it, so now it's costing the developer $6 million that land. And that's with DCC fees, CAC fees, direct taxes, etc. Right? So we talk about affordable housing, right? Well, what's affordable then? That really, the $900,000 is a lot more affordable than 1.3 million.
Right.
And so, like I said, I might be off a little bit about numbers, but generally speaking, you can do your own research and you can see this is extremely applicable. And then on top of that, I give you a perfect example. So one of the towers that we did a bunch of sales in and helped work along in New Westminster, I won't name it, but you guys will understand it. We originally, just when we opened Stonehaus in 2017, we were sat down with the developers and their representative to come up with like pricing structures, allocations. Who do you think the buyers are going to be? This kind of stuff, just helping them along with the process. So that completed last year.
The tower in 2017 completed last year.
Yeah. It took almost 5 years to run through council, right? Almost 5 years. Then it took an additional time, and the building time was obviously their problem, but you're talking 9 years from original purchase of the land to now actually getting paid out. So what's going to be the volatility in the market in 9 years? How do you run a pro forma on what the property prices are going to be in 9 years? Right. And really, it started at $700 a square foot is what they're going to sell it for. When they actually sold it, it was a good market. They sold it for just over $1,000. Now they're back down to $890.
Right.
Right. So, the point of that is this exact developer I sat down for lunch with, and he's the CEO of it, and they're no longer dealing in Vancouver or BC for the foreseeable future. They've taken all their business to California, and California in the States-wise, if you're not familiar, is one of the most difficult places to work as well when it comes to construction and building, comparatively to like Texas or Florida or one of those states where you're getting permits in a day or two, right? But from purchasing the land to being able to sell it as development, a complete rezone, 6 months there, 5 years here. There's a famous plot of land downtown that sold for $85 million, right? The average time now is 4 to 5 years to get a development permit. Even though the OCP says that this is a high-rise site, still 4 to 5 years with environment. So imagine buying something for $80 million. They're not buying it cash. You know, maybe they're putting $10, $15 million cash down. The rest is financed at 5 or 6%.
Carrying cost.
So what is the carrying cost for 5 years? What is the risk you have to take? What is all the different things that come into place? And who do you think pays for all that at the end of the day? It's going to be the
consumers.
100%.
Right.
The developer needs to make a profit, but the developers are working, I can tell you from this experience on towers, they're looking at between 8 to 15% return. That's what they're looking at, 8 to 15%, right? So they're not the ones, you know, sure, on $1 billion project, they're still making $100 million. Don't get me wrong. There's profit in there, right? But the reality is that 10%, that means every unit, if you're buying a unit for $1.5 million, they made $150,000 on it.
The rest is all cost.
The rest is all cost. So the risk ratio is insane when it comes to it, right? So these are the reasons why we found ourselves in these places that are open for business that have cut through a lot of the red tape. Like you look at Alberta right now, growing incredibly, right? They're still the only Canada in and of itself last year is for the first time since 1867. So since we basically became a country, right? It's our first year we've had immigration. A net loss of people. Now, some of these are like, you know, foreign buyers, work visas, and so on and so forth, right? So, and a lot of people are saying, well, that's because the Liberals went from, you know, wanting 500,000 people to a 300,000 person target. That's all fair and fair. There's different things, but the reality is 15 years ago, and I'm not trying to go Liberal versus conservative, but the last conservative government, their target was only 250,000. So it's still less than what our target was last year, and they had plus immigration, positive immigration. So you have to ask yourself, like, what policies are scaring these people away from us, right? What policies are making these things different? You know, I try not to get into political debates online and stuff because a lot of it, people, I don't try to pick or choose sides. I just follow the stats and the actual numbers, right?
Facts are facts.
The facts are facts, right? And so somebody posted, oh, this is nonsense that 40% of the top 1% earners have left or leaving Canada, right? So when we think about that, that's what I'm more scared of than anything.
Significant.
It's huge. They're like, oh, it's nonsense. It's not. You know who came up with that stat? The Bank of Canada. So what better person are you going to be looking at as far as a strong stat? And that's what you should be more worried about than anything with any market is your top 1% earners earning. Because a lot of people think the top 1% are like the billionaires and who cares if they leave. The top 1% are the ones that own 76% of the small businesses that, that own pretty much all the small businesses where over 70% of Canadians work.
Right.
So that is huge. And I've had tons of clients that do well. Maybe they make $1 million a year and we think, oh, $1 million is a ton of money. It is a lot of money. Don't get me wrong, but they're the ones that have risked it, that have put all the capital, that built the businesses. They're the ones that employ 50 to 100 people or 25 people, whatever it is. Tons of them, whatever they can get up to move, they're doing it. We're having a mass amount of fluctuation going to Alberta, max amount of fluctuation going to the States, all over the world, Dubai, etc. Right? So yeah, I think a lot of what we're looking at right now is policy based. And then once you have any kind of negative thing or any kind of positive thing, that is the reality, then you start getting the crowd and everybody kind of like backing whichever way you want to go.
Okay.
Now, the positive side of that is there are some major opportunities out there that weren't out there 2, 3, 4 years ago. Like if you're a buyer, right? Now is a better time to buy, in my personal experience. And I know it sounds like a typical realtor to say, right? But you have due diligence periods now. Like you can do subject to sale. You can actually do an inspection. And obviously before we're doing inspections at open houses, we're trying to do whatever we can, but now you have time, right? If you're upsizing, most of the stuff has been very similar. Like I just sold a client. They went from their home was at the peak worth about 1.5. Their place sold for 1.25, right? But the house that we bought for 1.85. That exact same house, like almost duplicate across the street in 2021, sold for 2.4. Right? So they literally netted out between the two over $200,000 in gain versus when they would have bought it before. I mean, there's other things to put into the equation, like financing costs and so on and so forth over the long run. But point being is there is some massive opportunity out there. It's just making sure you're picking the right sector, and it doesn't apply to everybody in this blanket statement that it's a great time to buy or it's a great time to sell. I think right now more than ever, you need a good agent that's going to be able to direct you through and be very honest with you and tell you, hey man, hold on, don't sell now. Or yeah, if you can, let's do this, 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 and this, and kind of guide you towards the right path.
Right.
Yeah.
If we dive into Tri-Cities, the market, one of your brokerages are here, and that's where you started, right?
Yeah.
Yes. Yeah. How do you see Tri-Cities compared to the Metro Vancouver? And what's happening with condo, townhouse, and detached?
So, and I know you work this area extensively as well, so you would have just as much input as I would for sure. What I found is, and this is, I can speak on the condo side, especially from working with multiple developers. We had 3 complexes in Poco for sale, etc. So condos have depreciated quite a bit. I mean, and
what percentage?
I don't want to lie to you, but I'm going to say, let me ask you, you probably know.
Yeah. 20%.
20%. That's what I was going to say. I was going to say between 15 to 25%.
I mean, I'm just looking back at what they used to sell 2018.
Yeah.
So it's like sitting in like a time machine going back, but your input as a project marketing, I'm looking at single units.
So I can tell you this. Okay. So when it comes to the project marketing, okay, I'll give you a perfect example. Okay. This is a great way to do it. So I won't say names because I haven't asked for permission, but I put a land assembly together, funny enough that you say, in end of 2018, early 2019. And this was off of Shaughnessy in North Boca. I sold that to one of BC's top developers, right? And I have a good relationship with their buyer and so on and so forth. Anyways, so I put that assembly together. They purchased those homes for $1.82 million. Okay. I went across the street and we put an offer in for the exact same set of homes, basically just copycat across the street. And they were going to build 2 low rises across the street from each other. So they all said no to it, right? They wanted 2.1 million. Developers like, no, I can't make the performer work with 2.1 million. Cross it out. Okay. I get a call. Actually, one of my team members gets a call 6 or 7 months ago. Okay.
this year.
This year. Like, we're willing to sell for 1.8. So obviously he tried not to laugh. That was the first thing. The second thing is, he calls me and he's like, hey, Sean, do you think this developer would be interested? Because they're literally right across the street. They're building it, etc. And so I'm like, I doubt it. Because literally prior to that, we were just selling something off Shaughnessy. And I'm like, let me call and check. So I called the 2 developers that are literally building on that street out of the 4 or 5. And he's like, oh, you remember when we wrote those offers? He's like, oh, I do, definitely. Right. I'm like, hey, so do you want it? They want to sell. Right. He's like, to be honest, we're not buying anything, nothing. So it doesn't matter what the price is, but I'll do you a favor. I'll run it into my performer right now. Right. So 10 minutes goes by as he plugs the numbers in. What do you think? What number on those individual homes did you think he came back with to make the numbers work?
You said you bought 1.89. The previous
1.82 or something like that.
So what? God, that's not my area of expertise. I'm just going to throw a number like 1.2.
So these homes by themselves, selling it as a residential home is worth 1.2 to 1.25, right?
Okay.
His number to make his performer work, which even at this number, he wouldn't buy for, to be very clear, was $1,050,000.
$1,050,000. Wow, that's accurate. Like, you went through not like 900, nothing, just went.
$1,050,000. So you're looking at $800,000 in loss of land value just to make the performer. Because when they were running the original numbers for sale, they were looking at $900 to $950 a square foot sellable, right? Now you're down to $750. Right? Construction costs have still gone up significantly, right? Which is probably where we're going to see already. Like now to get, I have a site that's coming up, 21 luxury townhomes in North Vancouver, right? In Edgemont. And so we're launching that in 2 months, right? To give you an example, they had multiple builders come in to bid on that because they don't have work, right? So now, back in the day when you couldn't get a builder because they were too busy with all their other stuff, right? Now they have to invest in the project themselves to win that bid. I mean, they're getting returns on that money, don't get me wrong, but they got to put in $1 million. They're going to get a return on that $1 million to actually just buy the job, right? So it's a completely different world that we're looking at. And it's because those pre-sales have dropped 20% plus, right? And like we talked about before, the high rises were running at between 10 to 15% margin, right? So now they literally have to drop almost 30%, right? The total cost.
Sure.
The only fluctuable state is going to be either building the supplies, and with tariffs and all these other things, the cost of goods have actually gone up and not down, right? So the only variables is going to be the land cost or what people are getting paid per hour to work on, right? So that's the next thing we're starting to notice is now wages are flatlined or starting to come downwards. People are bidding less to do the same job as they did before. So yeah, overall, it's affecting kind of everything in general.
So condos are that feedback, and when it comes to townhouse and detached, what's your take on that?
So townhouses, it really once again depends where. So townhouses in certain areas where there are no townhouses and where homes start at like 1.5, they're doing well.
Right.
Because you can buy that townhouse for, let's say, 800, just shy of $1 million, something like that, for 1,500 square feet. The jump up to a house is 1.5 million. So there's enough gap for people to make sense to buy those. Those are selling, right? And when I say selling, they're selling, but they're not sell out on a weekend. They're 20%, of a month, if lucky, in turnover, right? But where you find, like in Maple Ridge, for example, which is outside the Tri-Cities, but as an example, where townhouses went to $1 million a piece, and now you can buy houses for under $1 million. Like for any townhouse to sell in brand new, you need to beat the 600s, low 700s to make that gap difference work, right? So where you're finding in Poco that's selling is, for us anyways, and what I'm seeing is anything in the low 1 millions, and I'm not saying like million to $1.3 million, $1.4 million with suites, right? And the opportunity to maybe fourplex and stuff down the line, big enough lots, we're seeing those are selling relatively good, right? But I sold one of the, I don't know if it still is, but at that time it was a record within the last 12 months in North Poco. We sold that home for 1.76, right? Everything else in that area, average price point was 130, right? It was a beautiful home though. But that home, when he first did all the renovations and kind of built it out, was originally appraised by his bank back in 2021 for $2.1 million.
2.1 to 1.7.
And 1.76 or something.
Yeah.
Those lines we sold. So, and that the agent that had it before us had it listed at 1.899, right? They had it for 6 months, not even a bite. We were able to finally sell it through a big event and marketing campaign and so on and so forth. But yeah, it's, and this is what I was kind of getting at. It's really the pockets. Now, if you want to buy a condo, if it's already built or it's a big enough developer that you trust 100% it's going to go through, right? And a condo is what you need, and you're going to live in it, your kids are going to live in it, or whatever. There's a ton of opportunity to negotiate, and you're going to buy what you buy for now or in the next year or so. I don't think those prices are going to come back for another. I can't see them coming back, right? It's just because this is the perfect storm for these prices to be at these lows. But if you're a seller, it's also that issue, right?
Yes.
Now, once again, if you're going from the condo to the townhouse and the townhouse has gone down 400 grand too, it might make sense. So it's really everybody's story, everybody's path on where they are in the current game and what they need and what their motivation is. That's going to define if it makes sense to buy or sell.
Of course.
Yeah.
The winners obviously are the buyers, and what all the reason we talked and spoken, I also say is that, the buyers' prayers are heard.
Yeah.
So I could almost just say, as I go back in 2018, they're given this opportunity, but of course they have to be confident with this in that regard. So projecting with all these, what has happened, everything we talked from projects, receivership, ton of inventory, surpluses of developers coming and competing with the new units, like lots of things.
Yeah.
Where do you see the light? I mean, how many years based on projection we see that? And when people ask, it's like 20% is not a flick of a switch. It's going to recover in a year.
Yeah.
What is that going to look to us, and what kind of a time period?
So I don't have a crystal ball.
Yeah.
So this is
as best as you can see.
As best as I can. And generally speaking, just like I'm very fact-based when it comes to like political stuff or anything in life. Like I just try to find all sides of stories, show me the numbers, show me the real numbers. I'm going to investigate those numbers and I'm going to go from there. I'm going to make a decision based on that. If we look back in history, right? Because everything and if anybody says anything otherwise, they're completely nuts. Real estate's always cyclical. Always. Yeah. Generally speaking, if we look over time, I believe the average over like a 50-year period is about a 6% per year gain in property.
6%.
If I remember correctly, something along those lines, right? So, which is good. When inflation targets are supposed to be around 2%, then you're tripling inflation, which means that it's a good investment in general, right? The other reason why it's a good investment is your forced savings. You're paying down a mortgage, right? Where a lot of people, especially these days, extra income, you want to go to Mexico, you want to do whatever, right? Like this allows you to have something at the end of the day. But if we look at like a similar situation. So in 2019, we had an interest rate bump, and that's when they got rid of the foreign buyer's tax, or I think they implemented the foreign buyer's tax. They didn't ban it, if I remember correctly, in 2019. We had a huge slowdown, right? So that's when I remember getting $20,000 bonuses for selling condos and like all kinds of crazy stuff. Pricing dropped. So what ended up happening in 2019, and this is one of the reasons why 2021 was such a bubble and why there was such a massive influx, and people were waiting down the street to get pre
camping, so sleeping, and all kinds.
Exactly. And, we were blessed to have VIP access to bunch, so we could sell 100 in a month. You know what I mean? But reason why that happened is in 2019, when they had this interest rate, we had a surplus of condos, pre-sales, et cetera, at that time, and there was not enough buyers, right? So what happened then is the same thing that's what's happening now. If you look at 2020, the end of 2019, 2020, it had historical low starts for new construction projects, right? So everything in business is always not 100% due to, but always controlled one way or another by supply and demand, right? So what happened, it was almost a perfect storm. So in 2019, right, nobody could sell anything, so nobody was starting new projects. Then 2021 came, there was no new projects out there because everybody was still like, oh, the market's not good for pre-sales. And like we were talking about before, even though you buy a piece of land, it might take you 3 to 4 years to be able to start selling it, right? Or 5 years or whatever, depending on the project, right? So what happened was when 2021 came along and there was cheap money all over, 0.85% interest rates on variables and crazy stuff like that. You couldn't go anywhere and you just wanted to buy investments or you wanted to buy a house or you wanted to whatever. There was no inventory to buy. So what happens? Prices go like this because all of a sudden the demand is high and your supply is zilch, right? So what we're finding right now is that all these developers are trying to move the last of the product they can. If they have land, they're sitting on it, right? Many of them are going into foreclosure or some kind of receivership of some sort, right? So you're seeing that it's a historic low start again coming around, right? So what that means is it doesn't take 6 months to happen or whatever. It takes another 2 or 3 years for us to have very little new inventory. And once we have new inventory, and let's say immigration policies change and we start getting more people or something happens and the interest rates drop from, what are 5 years right now? In the 4%, give or take, drop down to maybe 2.5% or 2.99 or something like that. All of a sudden it becomes more affordable again. People have additional income to spend. Then you're going to start seeing the demand, even if the demand is not 2021, it probably never will be, right? Possibly, but probably never. But the supply is so low that it's going to outpace that. You're going to see some increase in pricing, right? So realistically, I think you're going to see an upward trend, but it's probably going to take 4 to 5 years.
4 to 5 years.
That would be my guess. Yeah.
So in the 4 to 5 years, the advice you would give, for example, a buyer, it's painful to be a seller, but one way or the other, I feel like, respectfully, it's a very challenging time to downsize to retire.
It's very challenging. That's one of the worst markets to chart, realistically.
Yeah, because 20% in Coquitlam houses have just adjusted. So, but with this psychology, what's your best advice for buyers and sellers will upgrade?
Yeah. And honestly, I'll just say this, money is something, but it's not everything, right? And the reality is that most of those people retiring are baby boomers or even older, right? So that home that they're selling for $2 million, they might not have a mortgage in it for years because they bought their place at $100,000 in 1970 or whatever, right? Where the more challenge comes is for people our age that bought something and they're even trying to upsize, but they put $300,000 down on a $2 million place, but now it's worth 1.7. They no longer have any equity. Put a deposit on the next place, right? So I think that's definitely a challenging issue. But I would be looking at long-term, right? So there's two things. If you look at the rest of the world, and I shouldn't say everybody in general, but I'll use Hungary, for example.
Right.
Hungarian real estate stays in family for years and decades and gets handed down, right? And I think in Vancouver especially, and probably Toronto as well, we've always looked at real estate as our number one investment. So it's investment first, home second, right? Where majority of the rest of the world looks at home first and investment may or may not even come to their mind because they're giving it to their kids, right? So I think that is going to be a mind shift that we're starting to feel is okay, what is my lifestyle going to be? What does my life look like going forward? What are my needs? I have kids. I have this. I need to be by a school. And I think sometimes we need to take the investment portion out and look at what actually suits our homes or our lives and make decisions on that. So my questionnaire for all my friends that, I still buy and sell for is I always ask them how long are you going to be in this place? If they're telling me 2 or 3 years, I just tell them to just wait then or hold off on it necessarily. If somebody's looking to live in a home for the next 10 years, then this is the right decision in most cases because you're probably going to make money off of it. That's the first thing if we're going to talk about the financial portion. But more importantly, it's going to suit your lifestyle. Your life is going to be better. Right. Because of it. Right. And if you're an investor, you really, there's so many different things to look into. I'm big into commercial on the investment side. I feel like that's still a lot of opportunity on the commercial side. On the investment side is for commercial. It depends on municipalities, depends on regulations. I just sold a friend a place up in Kamloops because you can buy a place. He's going to buy for $700,000 flat and brings in $4,200 a month in income. Right. So I think you just need to open your horizon for different types of options, see what's out there, what makes best sense. Certain municipalities I would never invest in because I feel like they're way too tenant heavy. right?
Mhm.
In the fact that as a landlord, you have no rights whatsoever. Like, and I think that once again, that's bad policy. That, if you have a building, for example, and New Westminster is one of the worst ones, but I'm just going to use that as an example, right?
Mhm.
You have a building that's your average tenant is paying $600 a month, right? Which many of these buildings have for 2 bedrooms, $600 to
Mhm.
$700 a month. But that building's decrepit now. It needs $3 million in renovations to make it, up to code and make it livable and so on and so forth. But when the rules basically state that when you tell this tenant to leave, you have to allow them to come back with this brand new home, uh, with $3 million investment, and you can only collect the amount of money that you're putting out there. Are you going to do it? And is that best for the community? Is that best or is it best to have these people pay $600 a month in a place that's falling down above them?
Mhm.
Right. So, and is that the government's responsibility or is that the landlord's responsibility? So I think, like, really in this time and space, it's more important than ever. And this seems like a pitch, but it really is the truth. It's more important than ever to deal with a good agent
Mhm.
that can kind of ask the right questions first. If you speak to an agent and that agent goes, how many bedrooms, how many bathrooms, and where do you want to get? And that's it, is the
Mhm.
wrong agent, right? They need to know your vision. What's your plan? What's your long-term goal for this? Like, what's important to you when it comes to growing? I know you're big into portfolios for your clients and so on. So you have to look at it holistically in so many different ways that wasn't necessarily applicable in 2021, where everybody just thought it was going to continue to go up. No matter what you bought, doesn't matter. You're going to make tons of money, right?
Right.
So it's definitely a different market. There's opportunities everywhere, but there's also a ton of red flags everywhere.
So say you're a first-time buyer, you have a budget of 800,000. Where will you buy and why?
So once again, I think this question would be like, where do I work?
Mm.
What do I want out of this lifestyle?
Right.
Am I buying it? Do I have kids coming on the way? Do I work downtown? Do I work from home? Do I whatever, right? Like, I think those are the most important questions these days, because
Mhm.
in 2021, I could be like, oh, these are the hottest markets. Like, it's impossible to get into this condo building. You get into this, you make $50,000 the next day. Right. So, like, literally that's what it was.
Yes.
Right. The fact that you got in first, you could flip that home
Right.
at 50 grand the next day. So long gone is that. And it's more lifestyle. And how does this
Mhm.
property benefit you? Right. Because then you can look for the opportunities. Like, if you work from home and you have kids coming, like, maybe look at getting a detached house with a bunch of land in Michigan.
Right.
Right. And forget the Tri-Cities.
Of
Right.
course.
Or maybe you work downtown and you would be spending as much on fuel driving to
Of
Vancouver.
course.
Right. Maybe Tri-Cities is the right place and you can find a nice townhouse. Or it really is lifestyle based, and what you can stick it out where you have room to grow
Mhm.
based on where you want to be in the next few years versus just like what's the best deal, in my perspective. Anyways.
And that is a new, even Vancouver, and I'm sure
Yeah.
consumers will do their thinking. They have AI, they have
Yeah.
family, friends, gives them a whole different set of thinking
Yeah.
for buying right now.
Yeah.
And that's a great way to put at it, is because you are right. I mean, we represented clients in the market where there was no emotion, it was rational decision.
Yeah. Yeah.
And now being in a completely different market, they would be looking at, but that's great because I haven't represented retail investor
Mhm.
to purchase anything. Going back to the opening discussion is, the rent controls are good. Like,
Yeah.
that was one incentive to be, but there are so many administrative work that you have to upkeep. It's becoming a part-time job to manage a property. You have envelopes coming in that you have to declare.
Yeah.
There is the vacancy tax, there's the speculation tax, and retail investors, when even times I go door knocking,
Yeah.
door knocking is perfect market research.
Yeah. It is.
And we don't want it. They may not openly say anything about the government, but they have their hands on our neck.
Yeah, that's exactly it. And I agree with you. Like, fair play is fair play, but the markets will usually dictate fair play. Like, if it comes to a point where people cannot afford to it, then they're just not going to rent it, right?
Yeah.
So they will decide where there is, where there isn't, right? Obviously, I'm a firm believer of making sure that there's affordability and subsidized things and stuff. I want everybody to have a roof over their head. Unfortunately, what ends up happening is that, and this is, a lot of people hate investors, hate the rich, hate whatever you want to call it, right? But the truth comes down to is that if they no longer want to invest, if they don't want to get those rental properties, if you don't, then there's not going to be places to live, right? And so either it's going to be institutionalized, and you're already starting to see that right now. Big REITs are coming to buy in everything, right? It's a completely different ballgame dealing with mom and pops that have their basement suite versus dealing with a corporation, right?
Right.
And you can only imagine one has infinite lawyer power, the other one doesn't. Like, which one is going to be a better place to live for, and what more opportunities do you have, one versus the other? So, yeah, I'm in agreement. There's a fine line to everything, but if you take the advantage of and the upside away from landlords, they're going to go to markets where the upside is.
Yeah.
Simple as that.
Commercials, that element.
Yeah.
Beautiful. Sean, thank you.
No worries.
There's always questions comes to my mind, but I'm like, you know what? He's a great conversationalist. I can listen to this all day, but this was an important because of the time of the market. It's always great to have an individual with the capacity of, a brokerage serving different markets and then just simplifying it for average.
And I would say, like, to your point on what you're saying is I cannot say this enough, like, and it sounds like a pitch, but the reality is now is more important than any to find a realtor that is on your side, right? That is going to actually know the entire story of where you're wanting to go and what you're wanting to do. Because this isn't just like a rat race where everybody's going to make money in 20 days. That's not the case anymore. So long-term planning, realistic goals, realistic numbers on all sides, sell, buy. I will say, and we actually did, we said no to 9 listings over the last 2 months, just because it would be not in their good interest or best interest to list that place, because it's not going to sell for the pricing that they need to make sure to move forward. So we talk to it. We don't just say, hey, no, we're not listing it. They're like, hey, this is our plan for the next 2 or 3 years.
Yes.
Let's try to figure this out, and we'll get you to a point where we can, so you can hit your next goal, right? And finding an agent that's going to be able to do that for you and be candid with you is more important, right? Like, we can be stubborn on the pricing. We can list it just for the sake of listing it, but it's if it doesn't hit your end goal, then it's not worth it. And owning brokerages in multiple places, like certain areas, like Kamloops, for example, it's our fastest growing brokerage. We had one team, 2 agents that did 21 deals last month.
Great.
Right? And on the island, we have another one in Nanaimo that did 11 between 2 of them, right? So there are areas that are moving, that are working. So we've got to ask ourselves, where are the opportunities for your clients there in partnerships? Where are the opportunities for agents? Where are the opportunities for buyers and sellers and for investors? They're there. You just have to.
Of course. Yeah. No, it's, and in today's market, even my own knowledge is not vast. So I rely on experts to come in. And
I don't know if mine's vast, but I'm working on it daily.
That's beautiful. Thank you so much.
Thank you. I appreciate it.